With a lot of legislation, I know you guys have 3 ways to look at planning for long-term care. And so can you share those 3 steps with me?
Yeah, absolutely. So the first one is people can self-insure, and that's what most people do, right? And probably mainly because they don't plan, right? And we've all heard the phrase, if you don't plan, you plan to fail, right? And that's true. I mean, think about it. What's the average cost of long-term care in the United States? It's like $7,000 a month, right?
Oh, yeah, 7 to 9. I think Arizona's 9,000.
Okay, and that's per person. So if you're thinking a married couple, I mean, we're talking possibly $14,000 a month. Who has that? Who's got retirement income like that?
Well, we're talking about retirement mainly, and people are focusing on retirement. So that's not including what you're talking about. Right?
In fact, it could be a huge drain on that, right? Let's say you go to retire, you're lucky enough to have a pension, and that's paying $100,000 a year. You think life is good, right? You're doing really well. In fact, statistically, you'd be doing really well compared to the average retiree. But now all of a sudden, one of the married couple needs long-term care. So there goes $7,000, right? If they're self-insuring, there goes $7,000 to $9,000. It's all gone. Yeah. There isn't anything left for the other person who doesn't need long-term care.
This is something prior to people retiring earlier because of the Great Resignation and some other factors. Like, I don't think we have enough data to support that conversation yet, but we're talking about pre-pandemic, typical planning, retirement funding, and more, right?
Yeah. I mean, so it's scary. People are extremely ill prepared, and we're living longer and longer, right? Medical technology is increasing our lifespans, but that doesn't mean, what that really probably means is that we are much more likely to need care at some point,
right?
For several years.
And the sandwich generation factor too. So you and I don't want to lead out of fear, but it's a real thing, and there's real numbers. Yeah. We're not making this up. So how do we be constructive with our time and learn what's available to us? So that'll be coming more through other videos and things that we have. But okay, so step 1, self-insuring doesn't mean you've always planned to self-insure. Most people don't plan for that. It sounds great and glamorous, but
yeah, it sounds like I don't have to pay premium, which is attractive. And I love what you said. We don't want this decision to be fear-driven, but you know who's not fearful? People who are prepared. That's who's not fearful.
Imagine the less stress. There's no stress there.
Yeah. Like, let's not pretend it's not something real, or that it won't affect us most likely at some point. Let's acknowledge it and say, okay, that's like jumping off a house and thinking, I'm going to ignore gravity. It doesn't work, right? It's going to affect you. Okay. So the second way people can prepare, which is the more traditional way, but it's been very unsuccessful, right, is buying long-term care insurance. People don't want to buy long-term care because when should people buy long-term care if they're going to get it? Way early in their life, right? Like 30s and 40s, right? That's the time when you should probably get it. Do people do it? No, because long-term care is kind of long in the future. I only need it when I'm 80, right? And so I don't want to pay for that. Plus, the entire focus of the financial planning industry is to how can we shovel more money into retirement accounts for assets under management?
Yes.
Right? So that's the objective. And so people it's been such a failure of selling that product that tons of companies have just stopped doing it entirely. And so there are really only a few carriers that even offer long-term care insurance. What are the issues? With long-term care, traditional long-term care, you pay a premium. Is that premium level for the rest of your life? No. It increases over time for the most part. Well, what happens to the benefit?
For a second. So to your point, what we've always learned is that it can move. Now there's new products and hybrids out there, but that's where a lot of our personal experiences come from, the old way of doing things, old products that would be so expensive and then keep going up in price.
Yep. And here's the thing too, long-term care is a lot like term life insurance, right? If you die while you're paying for the term life insurance, it's going to pay, right? But what happens when you cancel the term life insurance policy? What if you don't die while it's in force?
Right.
What happens to all the money you've ever paid into it? So it's just gone, right? Yeah, it's use it or lose it. And that's how long-term care insurance is too. Now, there might be some that have some riders that say refund of premium if you don't use it after a period of time or whatever. So you'd have to look for those options. But that's what I'm just saying, what scares people away from option number 2 a lot of times, right? Is that feeling like I'm going to pay for something and I may or may not even use it. So to me, that leads us to the third option, which I think has really been innovative, right? The life insurance industry has said, you know what? We can offer a rider on the life insurance policy, or we can make the accelerated benefit rider not just based on terminal illness, we can base it on chronic illness or critical illness, right? And chronic illness, they'll define as saying, look, you can't do 2 or more of the activities of daily living. So you can't dress, feed, bathe, transfer, toilet, or continence, right? So those are the 6. If you can't do 2 or more of those, then you're considered chronically ill. And you can, in a lot of cases with these new policies, get up to half your death benefit while you're living tax-free, right? For those purposes, sometimes up to $1 million, right? And so, that's a great option, because what happens if you don't use the long-term care benefit side of that? Well, let's say you don't have a chronic illness. What are the chances of you dying eventually? 100%.
It's a definite, just when, we don't know.
Yeah. Death and taxes, right? They're for sure. They're going to happen. And so that's kind of reassuring, I think, in my mind, is that, look, I can get this product and maybe I don't want to go the traditional long-term care route, which I'm not saying don't do that.
It's just not for everybody.
Right. It's much better than self-insuring, right? In option number 2 and number 3.
Yeah. And I came across that myself working with my husband on this, running the analysis. And he just goes, I will not buy a long-term care product. And it was frustrating for me for a little bit being in the business, but it did open my eyes to the fact that there's product education that needs to happen so everyone gets to choose their own plan. And so thank you for sharing your 3 steps, because I want people to know there's multiple ways to go about it outside of self-insuring, and take some time and just learn, because there's different ways some of these plans could trigger and could pay out. Some pay out cash and some pay directly to the facilities and different things. So these are some terminology that you can learn about, and we're happy to help there. Just really take some of the stress out of that overwhelming concept and fold it into your overall plan, because it has to be there. We know that the statistics exist. And so if you're just not sure if people are doing this, or you could even test talking with friends and family. What is your plan? And I think, Kyle, you can agree, almost everyone we know doesn't have an answer besides self-insuring. Most often, if you're just talking, or in my experience, and that's why I become so passionate about it, we need to do something else. We need to put some steps in motion, because most people are underprepared. They're not prepared.
That's right. And if they really don't want to be fearful or have fear drive them financially, then it's education, right? It's knowing your options.
Yep.
And being able to be proactive about it.
Wonderful. So I know you're always happy to help, and so am I. So thank you for sharing your 3 steps, Kyle. I always appreciate you being here.
Thank you.
Thank you for joining us on today's episode of The Amber Stitt Show. For more information about the podcast, books, articles, and more, please visit me at amberstitt.com. Until next week, enjoy your journey at home and at work. Thank you for listening.